Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming to you with the market recap for Thursday, the 11th of October. Put up a fight early, but gave up as sellers really continue to be in control of the market. So no lifelines thrown out to it just yet. Maybe tomorrow we have some big financial companies reporting earnings, notably JP Morgan, but Citigroup, Wells Fargo, and PNC Financial all are reporting before tomorrow's open. So if those big banks can maybe impress the market, maybe that can stop the bleeding for the time being. We will have to see. Next week, of course, we'll be getting smack dab into earnings. So you will want to make sure you're checking and double checking your trades to make sure you are aware if and when their earnings are, so you're not impacted in a negative way. If it's an earnings specific trade, great. If it's not, you never, and I said this before, but I've done it before, you never want to wake up to that nasty earnings surprise unexpectedly. That is for sure. So be sure to stay on top of that. We'll, of course, be talking a lot about earnings in the weeks to come. But, of course, today we're talking about bears and indexes breaking 200-day moving averages. We saw the S&P, the Dow, and the NASDAQ all break and close below their 200-day moving averages. The 200 did put up a fight for the S&P early today before giving way. There was a lot of volatility early in the trading day. And then, of course, the winning side just took over. And, well, here we are. We continue to be very bearish, very scared in the market. Overall, really probably not a whole lot different analysis on my end today than yesterday. Bears are firmly in control. Right now, we have to be careful from a bullish point of view if we're doing anything. And my argument is you probably shouldn't. And again, that's only my argument for myself. But I certainly will need to see something before I'm open to anything in that front. So, of course, closing below our 200, certainly not a good sign. Over in the S&P, same story over in the NASDAQ, as it basically kind of pushed through really early, started to rally up. Tech for a little while was having a little bit of a rally before, again, much like the overall market, throwing in the towel. Seems like a long time ago now that, even though it was just a few days ago, that buyers were coming in off of those intraday lows. Now they're waiting for the intraday low that gets built in the morning to get broke, and then they're jumping in with more selling pressure. So another very bearish development over in the NASDAQ, and very similar situation with the Dow Jones. We didn't close as far below the 200 on the Dow, but a close is a close. All of these things, we see things pierce through averages. You can see it here on the Dow Jones where it pierced through the average. It's not a guarantee that it's going to continue free fall, but it's certainly not a great look. We do want to see it, try to at least put up a fight. Tomorrow, of course, will be an important day to see if we just continue to push right below that, or if we're able to try to stick our nose back above those averages, particularly on the Dow, which isn't too far away from where we're at. But again, very bearish development from a broad perspective on our overall indexes. The Russell, of course, got this party started, especially as we look back in hindsight. We were talking about it a few weeks ago when it broke 17. It continues to perform, terribly as well. Of course, it broke its 200 yesterday, and also that major breakout point. We're continuing to see selling. To me, there's really no end in sight on the Russell. You got to go a ways before you're really going to find a potential area that's super impressive. I don't even know exactly where I would call it at this point, but there's not a lot of great support to hold it up that I'm seeing in the short term. Over on the materials, after breaking down yesterday, much like the Russell broke down yesterday and continued that bearish movement, as that continues to be one of our, in a land of immense bears, one of the weaker areas still over in the material sector. Again, many of these things are going to look very extended to the downside. They're going to look really ugly and bearish, and very extended to the downside. And just like yesterday, it's going to really be a repeat. Energy, though, yesterday, of course, it closed at that old resistance point. Did anybody who was potentially, now I wasn't going to be a bullish, as I said yesterday, on a day following, what yesterday looked like. But that price did intrigue me. I'd be lying if I said otherwise, because it's documented. I said it yesterday. But No, didn't even try, right? It gapped below that on the open. That completely obliterated that theory that, maybe energy is a stronger place holding support. Nope, break support on the open, didn't even try. And here we are approaching support once again. We are approaching a little bit of a swing level of support. We've seen some upward movement off of on the energy sector over the last little while. But how we got here, pretty brutal. I mean, that's 2 really bad days for energy. Once again, breaking the 200-day moving average. Not a great look by any means. I think we should keep an eye on that support level. We have seen that prop that sector up before, but clearly, while yesterday there was a case, hey, if we start to see some movement tomorrow, maybe we can trust energy. Today, for me at least, well, whatever it does tomorrow, I'm not trusting energy. So as we move into financials, filled that space. We looked at that space yesterday. Of course, we closed below support yesterday. And again, when the market's selling, it can really go. That's why we have to be careful and don't want to push it just because we're bored or feel like we're missing out or something like that. Yesterday, when we were looking at this, there was a lot of space between where it closed and that next level of support. And yet here we are a day later at that level of support. So on a positive note for the financials, they're at support. On a negative note, they sure got there in an ugly manner. We do have those big name companies. We're going to have to keep an eye on that, see how their earnings are, see how the market responds to those earnings. Obviously, being at support, that's not a great bearish entry point, but certainly in these conditions, I'm not going to be buying blindly off of the support bounce either. So we'll see how those earnings go, see how they impact that sector here tomorrow. Certainly some big names. As we move into industrials, they continue to struggle dramatically as well. They were holding up pretty well early in the week, but broke down here yesterday cleanly and continue to free fall. So again, moral of the story, right now, you're not a bull, right? So, you might be on the sidelines, you might be patiently waiting for some things to develop, and that's, perfectly reasonable and fine, but you're not a bull right now. At least I can't see any reason why anybody would be. Tech also fell through its 200-day moving average, much like the NASDAQ, as that continues to be an area that just can't pick up any steam overall in the market. I mean, when we're selling off like this, really nothing's immune, which leads us to staples. One of the things that we talked about yesterday, and we kind of liked yesterday, was potential bearish entries in the staple sector, because unlike other things, it didn't completely break down and find itself super overextended to the downside amidst all of that selling. But we saw that very bearish candle yesterday where, after, hitting a pretty reasonable, high on the intraday, selling off all day long and closing at the low. Of course, that carried over into today, breaking through that support to join the bearish party. So that continues to be, that's kind of a little bit lagging maybe on the overall selling, but clearly another bearish development over there. And I was, personally happy to see that, because I don't like to get into things when they're extended. So something, in yesterday's environment, something that wasn't extended to the downside and it creates an opportunity today, I certainly was not unhappy to see that. Utilities also got in on the action today, as yesterday's, early in the week, it was a safe haven. Today, it's going down with everything else. Now, it makes some sense technically, right? It was very extended to the upside. It had challenged that resistance level yesterday that has really just been a very difficult area of resistance for it. So I don't think, take away the broad selling in the market, I don't think this is a terribly, surprising development in the utility sector being extended at resistance in the market with bearish conditions. Hasn't broken down or anything like that. So this can be an area that, again, I don't think anything's going to be, nothing bullish will be triggering for my rules tomorrow. But we are still in that situation where we have made higher highs and higher lows, challenging that resistance. So I would at least be moderately open to a pullback situation here next week if that is the way it goes. But right now, we clearly are on the downward swing in utilities as they get involved with the selling party as well. Same situation with our healthcare, another casualty of the market. Yesterday, kind of hanging out just to right around that 50-day moving average. Today, completely blowing through it and continuing to free fall accordingly. Honestly, this is still an area that I'm very interested in, just not right now. I do think that the healthcare sector is going to present us some interesting opportunities a little bit down the road. This is a steep pullback in a very strong area. And to me, this is being drugged down with the market. Now, I might be dead wrong, but that is how I feel about the healthcare sector. If the market's not tanking, it's not looking anything like this. Obviously, the market's going to have to stop tanking, but I do personally think we're going to get some really interesting opportunities in the weeks to come within the healthcare sector. Again, it probably just depends on, do you believe in the healthcare sector like I do? So, but not tomorrow. Tomorrow, whatever healthcare is doing, it's doing without me, certainly on the bullish side of things. We fell through and crumbled right below the 200 in our discretionary because nobody got left out today in the world of stocks. Everybody got beat up, at their fair share, and discretionary was certainly no different in that regard, as they too closed below the 200-day moving average. As we move into real estate, already a very weak situation. We kind of saw yesterday, it kind of had that pivot type of candle. We broke that support that it set up a few days ago. Already a weak area, pre-market sell-off, and of course, well, we see the result of that. Very, very bearish development over there. We are working into a rough area. We've got a ways to go, and it's probably a little easier to see on a weekly time frame, as a lot of time it is. But you can kind of see there's some pretty strong support down here in the mid 29s. Now we're a ways away. We're about, roughly speaking, $1 away on the ETF from that support level. But that has been a pretty significant level of support. There's really no great support levels, in my opinion, between here and there. So while I don't necessarily expect it to free fall all the way down there, I can't see how it would be enticing to buyers as it currently looks until we get down into that range. So I do still think there's some really, quite a bit of room to the downside in the real estate sector right now, at least personally. And of course, lastly, we'll take a look at our communication services. They too got involved. Very volatile. There's quite a bit of back and forth in the market today, and certainly within this sector. But at the end of the day, gave up just like everybody else. This is the lowest point. Now we know that this is a very new, development. The communications services is a new sector. This is a new ETF designed to track that. But we are at the lowest point. Well, I guess we're not technically. We hit its lowest point today. Today's low is its lowest point since its inception. So, really, we find ourselves in the world of stocks. To me, you're either bearish or sitting on the sidelines. There is a lot of increased volatility, and we need to make sure that we take that into account as we're making our trades. But rest assured, whether this is, something big or not, it will always develop something that we can identify. And that's, in my opinion, in many ways, the hardest thing about being a trader is not trading, knowing that there's something going to happen tomorrow and, hey, I might be on the right side of it. I'm going with the trend. I'm always going with what's happening. And so maybe the odds are even on my side, but sometimes you just have to say, I want a good technical setup. And if I don't have it, that's why I like the staples going into this morning. They broke down. That was a good technical setup in that area. Everything else, and even they after today, are very extended. It doesn't mean that they can't and won't continue to fall down. It just means they're extended to the downside. Our risk to reward is not necessarily great. We can't sit through a pullback because that means we're risking a ton to be involved. Don't be afraid to go through your watches, go through some scans, be prepared. But don't feel like you have to chase after anything in the stock market, is my opinion. And that's always my opinion, but certainly in a volatile market. Now, we want to talk about some good news, at least bullish news. We finally were able to see our gold not only break above and close above the 50-day moving average, which we've seen it really struggle with as of late, but more importantly, at least in my mind, we were able to break through and close above 1220. To me, and I know to a lot of traders, I know to Matt and Tim, they're all, a lot of us have been watching that 1220 break as a potential bullish signal. Well, we have it. We have it. As is often the case when we see these breaks, what we really want to see, or at least what I really want to see, is I want to see it carry that over into tomorrow's open. Right? I want to see, if it's just going to immediately start selling back, I'm not going to completely be opposed to it if it pulls back to the breakout point. But what I really want to see is it carry on that upward movement. To me, this is a big deal. To me, this is a pretty strong signal. That doesn't necessarily mean we need to run out and buy gold right now or something like that. But I do think, as long as we're above that, we can look for those type of opportunities. Do keep in mind, if you're not interested or comfortable trading in the futures market, you can trade ETFs such as GLD to take advantage of the gold commodity when you feel like it is an appropriate thing to do. But certainly a positive development for gold. Finally, some correlation. Finally, maybe some money coming in to the what was known for a long time as the safe haven in gold. So very exciting over there. The dollar, after really kind of hanging around that breakout point, looks almost like it did last time, right? Where it broke out before, where it tried to have that breakout and then slipped right back down into that range. I hate when charts look like this because you can't trust them, so at least I can't trust them. We're back in the range, so whether, wherever you find yourself right now, we're back within that same old range that we've been in before. Either you're betting on that continuing to happen or you're waiting for it to break back up. It would be my thoughts. Right now I'm going to continue to say, hey, you're back in this range and I will treat you accordingly until you prove me wrong. Silver had a nice strong day. Another one of those days where it kind of ran up and called it good at the 50-day moving average. But of course, kind of got in on the bullish action as the market was really selling off. I still think that 15 is the number that you're looking for, but I can understand, and I wouldn't really fault somebody if it continues showing upward movement, jumping in on a clean break of the 50, trying to work back into 15. I would understand that. I think gold is a stronger signal. We'll see if I'm right or not as time passes, but I do think the signal that we have on gold is stronger than on silver right now. But at the same time, one interesting thing about the silver chart is if we do continue that momentum off of today's breaking through that 50-day moving average, there's really no great logical reason why it can't work back up to that resistance in that 15 area, at least again technically speaking. That also has kind of the look of a potential reverse head and shoulders, where here's our left blade, here's our little head, and of course it's yet to be determined. That's why I like 15 really is the buy signal on silver. If we break that, then that would make that, at least to me, look very much like a head and shoulders. Right now, it's just a potential head and shoulders, but it had a solid day, no doubt about that. Over in natural gas, we sold off quite a bit before catching our footing on the intraday low and rallying back up. This has been a very strong area. One thing that I've always thought and liked about natural gas is it's to me, it's isolated. It's insulated from the outside world. Natural gas is natural gas. And, to me, it doesn't make any sense that it's dramatically impacted by JP Morgan's earnings or by a broad market sell-off or whatever. Me and Coach Mark call it pure, call it a pure market simply because it's kind of its own thing. And I certainly am very open and interested in natural gas as the days progress because it's been very strong. We're seeing some pullback. We actually saw, again, remember when we see these long tails, what that means is it really was red right at some point in time. And then all of a sudden, at some point on the intraday, we'll go into the 15-minute chart here and oops, see if I can get rid of that. There we go. Hit its low point and then, oh, what are we doing? We can't be selling natural gas this much and really strong rally to finish the day off. So yes, we closed down. Yes, we closed in the red, but we saw an awful lot of bullish momentum coming in to natural gas as the day progressed. So that would certainly be an area that I will continue to monitor myself from that bullish perspective. And then, of course, lastly, crude yesterday was kind of sitting right around at its 20-day moving average, continued to sell off here today, continues to be, in that pullback phase. I liked it a lot better, as a potential turnaround. But honestly speaking, at 70, at that 50, at that previous 70 that, was really an issue for us back in the day, that is an interesting price too. That is an interesting price, in my opinion, at least, for a potential bullish entry. So as we approach that 70, that will be something I'll be watching for. Obviously, I'm never going to buy sight unseen, but I always think it's a good habit to get into. I would be interested at this price. Now, that it might just fall right through it and give me no signals and no harm, no foul. But what if it pulls back down there tomorrow and then we see a doji on Monday and some upward movement on Tuesday? By mentally preparing myself for that 70 price being something I'm interested in, I can kind of game plan how it should look, at least in my head, right? So, and I'm out nothing. I'm out nothing if it doesn't do that. So, I think that is a good habit to get into when you're looking at things that you're interested in, because it might be the picture perfect setup. Maybe we consolidate at 70 and then break it, after 4 days, a little mini breakout. Who knows, right? But certainly still in the bearish swing right now. No two ways about that. Overall, I still have a moderately bullish outlook personally on crude. That can and will change if 70 doesn't hold. So as long as we're above 70, I am a potential buyer over in crude. Obviously, that's going to have to be next week, just like many things are for me, if not everything. Tomorrow's just going to be a hangout day. I think I'll watch for the most part, at least from a swing perspective. But that is where we find ourselves, ladies and gentlemen, after another pretty good day of heavy selling in the market. Until it stops, it's just going to not stop, I guess. Volatility spikes, fear takes over. It will lead to great opportunities. That's the one thing I have learned over the years, that the pullbacks, and when they really start and they're fast, you're not quite sure if you should jump in, or if you should let it play out. But I've always found that really good opportunities will present themselves off of this. Clearly, it's not going to be today. To me, it's clearly not tomorrow, and it may not be next week. It might not be for a while. But, we're seeing some things at some prices that just a month ago we didn't think were possible. And yes, we got there in a nasty way. So we're going to have to see some buy signals before those prices mean a whole lot to us. But hey, the price is right. Now we can start hoping for some signals. Make sure you are following your trading rules. Don't feel like you have to chase. If it's a good trade for you, take it. Keep in mind the context of the overall market. Obviously, keep in mind your position sizing. If you see good opportunities with good confirmation, by all means, follow those rules. But again, don't ever feel like you need to be doing something because the market's doing something. That's a great thing about being a trader. We only have to take what we like. We only have to take trades that fit our rules precisely. And the hard part is just saying, yeah, I'm bored though. I want to do something, but I'm not going to, because I'm going to stick to those rules. So make sure you're doing that. With that, ladies and gentlemen, as always, it is certainly my pleasure, and I do appreciate everybody's time. Be sure to subscribe to the YouTube channel if you haven't already, and hit that notification bell so you can be alerted to any new videos that we're doing over here. And be sure to follow us over at Tackle Trading on Twitter to kind of keep an eye on some of the things that we're following during the course of the day. If you like the market recap, it is always helpful and appreciated if you give it a thumbs up to let us know that we are on the right track. With that, ladies and gentlemen, as always, it is certainly my pleasure. Get out of here. Happy trading, and I will see you in the next one.